It's midweek. Welcome to Business Morning, live on Channels TV Lagos, Nigeria. I'm Chimize Obi Iwagu. The Monetary Policy Committee of the Central Bank at its just concluded monetary policy meeting maintained status quo by leaving all the monetary policy parameters unchanged. The Central Bank Governor Godwin Emefiele says inflationary pressures were continuing unabated while Africa's biggest economy was undergoing its first recession in 25 years, justifying the rate decision.
To restart growth. Tightening at this time would portray the bank as being insensitive to growth expected prospects. Also, the deposit money banks may easily reprice their assets, which would undermine financial stability. Besides, the committee noted the need to create binding restrictions on growth in narrow money and structural liquidity and the imperative of macroeconomic stability to achieving price stability that is considered conducive to growth. The committee also considered the argument for loosening the stance of monetary policy, noting its desirability in stimulating aggregate demand if credit increased with lower rates of interest. It noted the argument that loose monetary policy was capable of delivering cheaper credit, making it more attractive for Nigerians to acquire assets, thus creating wealth and stimulating aggregate spending and confidence by economic agents, which would eventually lead to lower non-performing loans in the banking system. However, the counterfactual arguments against loosening was anchored on the upward trending month-on-month inflation and its impact on the exchange rate. Loosening will thus worsen the already negative real interest rate, widen the interest rate spread, and reverse the positive outlook for the current account position. On outlook for financial stability, the committee noted that the banking sector was becoming less resilient as a result of the adverse macroeconomic environment. Nevertheless, the Monetary Policy Committee reiterated its resolve to continue to pursue financial system stability. To this end, the committee enjoined management of the bank to work with deposit money banks to promptly address the rise in NPLs, declining asset quality, credit concentration, and high foreign exchange exposures. The committee also noted the benefits of loosening at this time, which will be in line with the needs of fiscal policy to restart growth. The MPC, however, noted that loosening will exacerbate inflationary pressures, worsen exchange rate, and further pull the real interest rate into negative territory. Since interest rates are sticky downwards, loosening may not necessarily transmit into lower retail lending rates. The committee noted the consecutive positive contribution of agriculture to the gross domestic product during the fourth quarter of 2016, a development partly traceable to the bank's interventions in the sector. The committee remains optimistic that, if properly implemented, the newly released Economic Recovery and Growth Plan, coupled with innovative growth-stimulating sectoral policies, would help fast-track economic recovery. Committee's decisions. The committee, in consideration of the headwinds in the domestic economy and the uncertainties in the global environment, decided by 9 out of 10 members to retain the NPR at 14% alongside all other policy parameters. 1 member voted to raise the NPR. In summary, the MPC decided to 1. Retain NPR at 14%, retain the CRR at 22.5%, retain the liquidity ratio at 30%, and lastly, retain the asymmetric corridor at plus 200 and minus 500 basis points around the NPR.
That was Godwin Emefiele, the governor of Central Bank, announcing the MPC's decision on Tuesday.